Moving on now, shifting our focus, the Bank of England says it will not hesitate to hike interest rates further to curb inflation, hours after the pound hit its record low against the dollar. Now, the pound's value dropped after UK's new Chancellor announced a controversial tax-cutting mini-budget on Friday. The fear deepened when Kwasi Kwarteng pledged further tax cuts over the weekend. UK's radical financial policy is in contrast with the world's major economies, and it comes at a time of the worsening cost of living crisis. What does a weak pound mean, and how will it impact the lives of Britons? For more on this, we're now being joined by WION's business editor, Sumit Chaturvedi. Sumit, thank you so much for joining us. Now, what do you think this means for the people in the UK?
Well, the biggest problem global economies are having at this point of time is inflation. So clearly, UK is impacted more by weakening pound than many other countries because they are heavily dependent on gas, imported gas. So first of all, the increase happens is on the price of gas, which is important for them, very crucial for them. Remember, their whole economy, right from households to fuel, to cars, to even industries, they all run on fuel. That is one important thing. So there are direct and indirect things which will become costlier as a result of the plunging pound. First, we talk about direct fuel, mobile phones, gold, oil, food items. They all are things on which now Britons will have to pay more. Now there are indirect items, fertilizer, oil again, plane parts and imported cars. These things are in a way going to cost Britons dearly, indirectly. So they are now going to have this kind of problem, that weakening pound. They have to now go and spend more on this. Remember, British drivers, they are paying £5 more for fuel to tank for a full tank of their cars. So this is kind of double whammy they are facing. So in a way, what could have easily been done is to first stabilize currency and then move on to hiking interest rates. That's what some economists are also saying, that rather than going for rising interest rates which make economy poorer, you go for stabilizing currency, which is more important, and that can lessen the burden on a common Briton.
Absolutely. In fact, I was just going to come to that just to understand this a little better. With the currency depreciating, there's also rising fears of a recession, of course, and all of this amid the cost of living crisis. So how do you see things panning out going forward, especially now that this mini tax budget has been announced as well?
Well, clearly now a new government and establishment is there in place in UK. A new package has been announced, because of which the markets even are coming down. So overall, the resources, all whatever they had now to substantiate their living, they all are getting depleted. Coming from even your currencies to other assets, the value of all assets are declining. So remember, people had gold also, and gold is also coming down. So keeping all that in mind, a plunging pound just add to their worries and concerns that it's not going to be easy winter for them. Remember, winter is coming and they need gas for everything from households to even their vehicles and industries, and all this plunging pound, it makes it tougher for them. Pound is getting equivalent to dollar, which we saw in the case of euro a few months ago. If that happens, pound was clearly not very balanced as compared to dollar. It is getting almost at par as compared to dollar. So it's not going to be an easy winter for Britons, I would say.
All right, well, Sumit, thank you so much for your insights on this and for making us understand the impact of this as well. WION is now available in your country. Download the app now. Get all the news on the move.